Hello and welcome to today's edition of Route 664, the Road to Human Kindness. I'm Les Winston. I'm your host, and I wear several hats. I'm also the president of the Aventura Sunny Isles Beach Chamber of Commerce. Actually, it's the West Aventura Sunny Isles Beach Chamber of Commerce, and we are having a breakfast meeting on Friday morning, the 22nd, at Moe's at 8:30 in the morning, where you can come and learn about the tax strategies that you may want to think about before year end. Our objective was always to help you reduce your taxes as much as legally possible. We use charity to do that. We use the charitable devices given to us in 1969 by Congress, and they are the charitable gift annuities, charitable remainder trust, and pooled income funds. And these devices are fantastic in the way that they can reduce your income tax, increase the amount of income that you have to live on for your lifetime and for others if you want to pass it on to others. And then at the end of the day, when all the income beneficiaries are gone, that money would go into the community where you direct it and who you into the organizations that you want to help. This is what Congress saw in the future. They knew that the um, ability for the people to grow their charitable wealth and grow their ordinary income was going to be in question, and so they created these devices to do that. You can take advantage of those using using charity to do that, and we are going to teach you all about that on Friday morning at 8:30 at Moe's. That's the 22nd of November, this coming November 22nd. My guest today is also somebody who deals with tax avoidance, tax planning, and again, the government is very wise. When they want something, when they want more of something, they tax it less, and when they want less of something, they tax it more. So, in the case of developing communities, there's an opportunity that is called an opportunity zone. My guest today is like the Wizard of Oz. The OZ is the opportunity zone. When you want to learn about this, you need to talk to John Berlet. Good morning, John.
Hey, good morning, Les. Wanda, nice to be with you all today.
Yes. So the opportunity zone is something fairly new to, when I say fairly new, it's within the last decade. This was something that was created during the first Trump administration, I believe, with Senator Tim Scott being involved. And they were created so that the investors could take advantage of some favorable tax benefits and increase the economic security of communities. How did you start? How did you become involved in opportunity zones to make yourself the Wizard of Oz?
Okay. Well, thank you. I had a financial planning firm in Austin, Texas, a registered investment advisory practice, and I sold almost no securities. I'm kind of a safe money guy, fixed annuities, income planning, tax planning, that sort of thing. So I had a law firm approach me in March of 2021 out of Michigan, offer me a chunk of money for my client base, my book of business, we call it. And I've been hearing bits and pieces about this tax incentive called Opportunity Zones that just came out in 2017 Tax Cut and Jobs Act. And you're right, it was co-sponsored by Cory Booker and Tim Scott, so it had bipartisan support and went in effect in 2018. So what I did, because I had a capital gain event, I went to showroom floor, bought a motor home out of Las Vegas, traveled 17 states looking at
Okay.
these opportunity zone locations that were chosen and certified by the governors of each state, and decided to deploy my gains in an area along the coastal Bend region in Texas called Rockport. So it was out of a capital gain event. And what's kind of unique about opportunity zones is many of your listeners are probably familiar with 1031 exchange.
Right.
Certainly, your practitioners are 1035 exchange familiar with, which
Mhm.
is annuities, life insurance, like kind, 1031 for real estate, like kind.
Mhm.
With opportunity zones, you can have any capital gain from, in my case, I sold my practice. If you can have an inheritance, short-term capital gain, long-term sale of stocks, crypto, any money is eligible if deployed in a certain time frame from when the gain was incurred. So that's
So
my
you
story, how
you
I
actually
got
had
to
you
it.
had an event. You
I
had an
did.
event that spurred you to find a way to solve a problem, a tax problem, in a sense.
Correct. Yes.
So tell me how the opportunity zones work. When you say the governors or the states are the ones that figure out who or what areas are opportunity zones, is that how it works?
Well, it has to be in the lowest 25 percentile income census data based on 2010, which was the most recent data available when the tracks were chosen.
Mhm.
Now they're coming up, it's going to sunset in 2025. So there's some talk now with Trump being reelected that they're going to gain some momentum in extending some of the provisions of the tax incentive. But it primarily is a designed to get private equity to invest in certain low-income census tracts, also known as Blythe communities. Um, there are, areas around the country that were, in my case, the county I stumbled across is 85% opportunity zone. And
Wow.
the next county over is
Mhm.
only like 3% opportunity zone. And because all the jobs are in the next county over, refineries, the income, and in the county I deployed my gains is called Aransas County or Rockport, Texas. It's primarily second homeowners. And here it's a tourist destination.
Mhm.
These property owners file their income tax in their primary residence, like San Antonio, Austin, Houston. So
Right.
it's kind of skewed the system somewhat, but the fact of the matter is the people that live here in 2010 were in the lowest 25% income percentile based on the
So
2010
and so
census.
that's the guideline. The guideline is to help blighted areas become improved and therefore improve the community as a whole. And how does an individual investor or how does an individual who has a tax problem start? Where do they start with how to solve their problem using an OZ, an opportunity zone?
Okay. Well, the first thing is to have an eligible gain, and
Right.
then uh, within, I believe it's 180 days, you have to choose a fund, an opportunity zone fund that has to be compliant. And there's, in my case, mine is a self-governing fund, and we file semi-annually certain forms with the IRS to make sure we're compliant. And you have to have had the gain within a certain time frame, an eligible gain. And then if you do invest in an opportunity zone, you defer that gain till 2026. So it's kind of a short window now, the
Mhm.
uh, the deferral. You end up still paying your gain, but in theory, you're using that money in the interim instead of Uncle Sam.
I
But the
see.
big incentive is after 10 years, all your appreciation, all your gains, if any, are coming out totally income tax free, like a Roth IRA.
So what happens is, let me just see if I understand it correctly. If you have a capital gain in, let's say, 2024, or in the last 180 days, within the last 180 days in 2024, you
Mhm.
now have um, funds that that include that capital gain that can now be put into an opportunity zone fund.
Mhm.
And what you're doing is you're deferring the capital gains. In this case, because there's a sunsetting, is that why it's 2026?
Correct. And
Yeah.
but see that
So
so
you're
that
deferring your capital gains till 2026. You're not paying them in 2025.
correct.
And during the period of time that you and then what you've done in essence is, so after you've paid the tax in 2026, you've got an investment now in the Opportunity Zone Fund that can grow and produce income and capital gains that would not be taxed. Is that correct?
That's correct. Yep.
So that's a very important piece for people who want to build an endowment and have a tax-free endowment in a sense for themselves, where they can increase their personal income on a favorably taxed basis. Is that it's like almost like a Roth IRA in a sense.
I describe it like this: a 1031 exchange got married to a Roth IRA and they had a little kid named Oz. It's,
Okay,
it's the best of
I
both
like
worlds. It's like a
I like
30
that.
1031 on steroids.
That's great. I love that. The 1031 is a little bit longer deferral of the capital gain because it's deferred until you sell the property at the end of the day, but you have to pay the capital gains tax then. So the capital gains tax is payable either way. It's just when you're going to pay it. But it doesn't force you to go back into the real estate business, if I understand you correctly. When you buy into a fund, when you're buying into a fund, what are you actually buying into? You're buying shares in the fund?
Well, there's several ways they are set up. In my case, I have a single investment fund that is a membership, an LLC, and we're developing a mixed-use boutique hotel property in here in this tourist destination. However, there are funds there's some publicly traded opportunity zone funds now that are out there. And there's one out of Phoenix, Mesa, Arizona, Caliber, that's really knocking it out of the park with different diversified asset.
In your case, you're doing them for a small number of people on a boutique basis, if I understand what you're saying correctly. You're doing it in a limited fashion where you're not making an offering to a lot of people. Are you doing it for clients that you actually find or people coming to you? How do you get your customer? How do you get your investor?
So I built my annuity book of business. So I have relationships that I've earned my clients' trust over the years, and some of them have other funds that's suitable for a little higher risk. And
Mm-hmm.
so I've gone to my friends and family pretty much to get my fund established. We
Mm-hmm.
have not broke ground. We've got the drawings permit. We have a civil site permit. We're just about shovel ready. Still looking for capital partners. At this point, it is a Reg D 506C offering. And I have
Okay.
another fund that I manage as well that is under regulation crowdfunding. I don't know if you're familiar with that term or not.
So are these regulations, are these IRS regs or what, Internal Revenue Code regs or what, where
No,
are they?
no, they're SEC.
SEC regs, okay.
Yeah.
Because
Uh,
they're based on investment offers.
correct. The 506 Reg D 506C is for accredited investors,
Mm-hmm.
and you have to have a certain income level to participate or a certain net worth. And
Mm-hmm.
then the regulation crowdfunding platform that I manage is open to just about anybody in the world. You do not have to be a accredited investor, but it's not an opportunity zone play either.
Okay, so you're not able to get into an opportunity zone with crowdfunding. You're just funding another development, another parcel, but you're not making the offering through an SEC through the SEC. Is that correct?
Reg CF, it's called. It is highly
Okay.
regulated by the
So
SEC.
crowdfunding is regulated. Okay.
Yes, it is. You have to have offering portal, and all the investment activity must go through that offering portal. And mine is domiciled with a company called Silicon Prairie. And
Hmm.
we're really got a unique niche that I've spent 30 years in this space, and we're buying real property at tax sales for back taxes, delinquent taxes.
I
And
see.
in Texas, it's a pretty investor friendly setup where you actually get a deed on day one if you're the high bidder at the tax sale, subject to the prior owner's right of redemption, which is a short 180 days. If they do redeem, they have to pay us what we paid plus a 25% penalty,
Mhm.
which in effect is a 50% first year yield. So that's a space I really love, have had lots of success. Just a few months ago in August, we bought 15 acres up in Northeast Texas, heavily wooded pine trees. And we did not know, but we ended up getting 80% of the mineral rights had never been severed from the surface. So we got a big windfall. There's 5 lateral, some fracking going on, and some new uh, income coming out of that track. So
So, so I need a little bit of guidance here for John who's listening out there. Wants to know how he can take advantage of the opportunity zone, and can you help him?
I
Uh,
sure can. I can leave my phone number. I can give a website. I'm a member of a organization that has lots of professional resources, leaders in this space, tax planners, attorneys, uh,
mhm.
that I can refer people to us, and I can certainly share my platform with.
We always talk about when we're dealing with commercial real estate. Actually, there's a course that we have out right now, which is dealing with commercial real estate using a charitable device. And we always talk about two alternatives. One is a 1031 exchange, another is an installment sale. And now we would need to include opportunity zone as another alternative in addition to using a pooled income fund. So the opportunity zone Just to reiterate, an opportunity zone allows you to have a capital gain in 2024. You can take that capital gain property, the value of that. So let's say it's the total value of the property that has the capital gain, or is it the capital gain only?
Good point, or less. It is a capital gain, and something I like to really point out, it's not like a 1031 and it's all or nothing. You can
Mhm.
use a portion of your gain, some of your gain, or all your gain, or it doesn't have to be an all or nothing.
Can a corporation use it for corporate capital gain if you have a corporate capital gain?
To the best of my knowledge, I believe they can, unless, but I'm not an attorney, and I would recommend someone get legal counsel on that.
Okay, just speaking for myself, I may have a corporate capital gain by selling a piece of real estate. So it's owned by a corporation. That means the corporation could, in essence, invest that capital gain into a portion of that capital gain or all the capital gain into an opportunity zone, is
Correct.
what
Now,
you're
when
saying.
the incentive first came out in 2017 Tax Cut and Jobs Act,
Hmm.
there was a step up in basis. There was an additional 10% you could step up, and then, well, first it was a 15% for 2 years, and then it went to 10%, and then it went away. That step up incentive went away in 2022.
Hmm.
So that was a really, they're thinking that may come back out. The uh, tax advisors that I'm listening to think there's some enough strength in the legislative bodies to extend that step up in basis.
My guest is John Berlet, and John is the CEO and general partner of Coastal Bend Oz Fund. He focuses on opportunity zone investments. It's a very powerful tool that enables investors to gain tax advantages while contributing to the revitalization of underserved or underdeveloped communities. And it's wonderful work that you're doing. We obviously it's part of how you can make community development work by getting people to do things for favorably tax on a favorably tax basis. We're going to take a short break. We'll be back with John Berlet, and we'll talk a little bit more about opportunity zones and how they can affect you if you have a capital gain and you want to defer it, and then you want to invest it and get the proceeds coming back to you tax free. Lovely thing. I love that you're married to the IRA and the 1031 exchange. Good idea. We'll be right back. Exciting news. The Discovery 664 Academy podcast is live on Spotify. And if you're not following us there yet, you're missing out. We're dropping new episodes every week, so don't miss out on more of the most powerful strategies to grow wealth through charitable planning. This is what we're all about on this program. When you tune into the Discovery 664 channel, you're going to see podcasts that will enlighten you and keep you up to date on how to deal with your charitable financial planning and to do the best job you can to build yourself your own 664 account. That's what's the end result of what we're trying to do here. We want you to endow yourself and then endow the community. That's what the bargain was when Congress gave us these laws in 1969. Do something good for the community when you pass, and we'll give you lower taxes while you're alive. That's what the bargain is, and that's all we're trying to teach you. Go to the 664 Discovery channel and find out more. And we're back. My guest is John Berlet, and he is the CEO and general partner of Coastal Bend Oz Funds. And we are talking about opportunity zones. You may not be familiar with opportunity zones, but they're a wonderful tax advantage, a lot of tax advantages. Let's go over those tax advantages one more time, John. I think people need to be fully able to deal with this because they need to know that it exists. Now that they know that it exists, they can use it. If they never knew about it, they wouldn't be able to. So we've given them an exposure now. So tell
Right.
us a little bit about the tax benefits again.
Okay. Before we go into the tax incentives, let me add a little bit of nuance that comes along with it. And that is, if you buy an existing property, you have to substantially improve it.
Okay.
So there is that requirement. Let's say you bought a $500,000 property, the dirt was worth 100, the improvement was 400. You have
Hmm.
to match the 400,000 to what's it called? Improve, substantially improve the
Okay.
property. So the incentive, it goes like this. If you deploy some or all of your capital gain in a qualified opportunity zone fund, you defer that gain that you owe either 15 or 20% until 2026 tax return. So
Okay.
you don't eliminate that gain. You're just allowed to use that money an additional year and a half at this point or less. And instead of Uncle Sam, you can put it to work for you. But 2026, you've got to pay that capital gain. If the incentive now, the best incentive always was, if you hold that investment for 10 years, all your appreciation, all your growth, all your gains going forward, if any income are coming out totally income tax free, like a Roth IRA.
So during that 10 years, what is the strategy? Is it to defer the income? Is
Uh,
can you
no,
defer the income, or how do you deal with that?
it depends on what the fund is set up like. Ours, we're going to do a cash out refi in year 3 once we stable the property,
Hmm.
and that is not a taxable event. So our intent is to get our investors back um, the at least amount of their tax
So
bill.
so they don't pay, so they're not paying anything out of pocket.
Yeah,
Uh, you're funding the tax payment.
that's the goal. Of course, that's not guaranteed and
Right.
subject to progress.
And of course, it all depends on where the individual that you're dealing with is in their game.
Right.
With,
Yeah, you
with,
look at
with the
people in New
situation.
York and California and high state income taxes,
Mhm.
that 20% now is like 30% tax
Right.
or
Right.
more.
And
So
it's
it's
fun. And I just curious, or just to restate the kind of a factual position here, where when it was first passed, of course, 2026 was the date that was deferred to, right? It's not it's shortened because we're almost at the end of the tax cut period.
yeah.
I guess John Berlet, he is an expert in this area, and if you want more information, contact John if you have a situation that he can maybe help you with regard to a capital gain that you have. I don't want to inundate you, make you too busy, but if you're open to mentoring people and helping people get through this, are you? I have to talk about this. Is there a fee involved? Is how does Coastal Bend Oz Fund get compensated?
We are a managing entity and we get a management fee. And the same way with my other fund, Core Tax Deeds, we have a management entity and there's a fully disclosed fee structure. Uh, but we're getting most of our reward on the back end when we exit the property.
All right, John, thank you very much for joining us on Route 664, the Road to Human Kindness. This is a part of Road to Human Kindness. It's kind to develop the community and make it a better community, improve areas that are not doing very well, and improve everybody's well-being by utilizing something that the government gave us in the tax incentives, and very much in line with what we do with 664 and the theory of using charity to help people avoid taxes and increase their income, and that's what you're doing as well. And that income can be tax-free at the end of 10 years. Once that property once you've owned that property for 10 years, that becomes tax-free income, which is a real benefit. So thank you again for joining us. John Berlet, the CEO and general partner of Coastal Bend Oz Fund. Thank
Thank
you.
you, Les. Thank you, Wanda. Enjoyed being on the program today.
You bet. And we'll be right back after this short commercial break. Don't go away.
We've got best-selling authors.
You are going to start to uncover all the layers that are covering your genius.
And some of the world's top leadership experts.
We have structured a mastermind program that is very unusual and it is very powerful.
Robin Sharma at noon.
Your creativity will soar, your productivity will be epic, your impact will be legendary, you will be the best in the business, and you will not only achieve remarkable things, but you're going to feel sunsets. You'll feel a connection to people. You'll feel for what's going on in the world, and that will make you a world changer in your own unique way.
Robin Sharma at noon at 4 p.m.
It's a
Blaine Bartlett.
exploration of what it takes to be a highly effective leader in today's fast-changing environment.
Best-selling author, executive and leadership coach.
And if you've been liking what you've been listening to on these Soul of Business podcasts, how does one become a leader that can keep connection to the soul of business?
Blaine Bartlett at 4 p.m.
Look forward to seeing you there.
At Route664.org. This is Route 664 Radio.
And we talk about causes, the reason why you do these things, human kindness, what it's all about. My friend Wanda, she wants to help you with a furry friend.
Well, of course, 664 is all about helping out our communities. And in our communities, we have
our fur friends, our pets. And I happen to live in a neighborhood where people sometimes drop off pets. So I found this little girl roaming around the streets the other day, about a week ago, took her in. She is available for adoption from my first rescue animal from the Further Love Rescue for now. Someday it'll be Further Love Foundation. Come on, 664, do the work.
And
So
thank
here
you,
we go.
Wanda.
So leave your
Adopt her, make her have a nice,
Yeah.
beautiful home.
She is I guess I've been Googling and learning about the long-haired Chihuahua. I'm going to guess about 10 years old. She doesn't have a chip. She didn't come with a collar, but she could come home with you, leave your name below or how I can get a hold of you, and there will be some vetting
Okay.
because they don't go to just anybody. Welcome. Let's further the love.
Absolutely, 100%. See you guys.